Jim Jubak, and welcome to my new YouTube video for Wednesday, the 3rd of May. I'm recording this on Tuesday, which means that I won't have any idea of what the Fed is actually going to do today. So we'll get to that in a minute. But first of all, if you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification when we're doing our next one. We're doing about 3 a week. If you want more of my stuff, my free posts show up on jubakpics.com. My paid posts, which is this free post plus more, and 6 portfolios instead of 3, on my paid site, which is jubakam.com. You find links to all that down below. A word or two on the shirt I'm wearing. This is not a Sauron Mordor eye. This is my son. My son is just finishing a graduate program in film archiving and restoration at the University of Amsterdam, and this is the t-shirt for the main archive and film center in Amsterdam. So, as they say, my son went to Amsterdam and all I got was this lousy t-shirt, but it's actually a pretty cool t-shirt, so I'm very happy about that. Okay, so this has been a great market if you own the right stocks. If you didn't, and basically you own the index, it's not been so great a market. Okay, so so what we're looking at is a very narrow momentum market. And when this happens, and you start to get narrow, you start to worry that it's going to turn over. So basically, this is typically what happens at the end of a momentum market. So the topic for today is this the end of momentum? One last momentum blowout. So I'm going to show you a chart for meta platforms, once upon a time known as Facebook. Facebook is up 102% this year. And that's because it was way down here last year, as people thought that the whole meta systems, the whole Facebook ecosystem and would dissolve. So what's interesting to me is that you've got, in the last month, Facebook is up about 14, almost 15%. The S&P in the last month is up 1.9. So you got this incredible 1.5. So you got this incredible diversion between meta platforms up 15% in the last month. The S&P up 1.5% over the last year. Year to date, meta platforms up 102%. S&P is up 9.12, which is not a bad return for a full year. But for just part of a year. But what it looks like we're starting to see is this increasingly large divergence between the indexes as a whole, which represent a lot of stocks, and a very few stocks. Meta platforms, Netflix, Microsoft, NVIDIA. These are the stocks that are really driving the index, and they're really performing the index. One of the things that worries me is that when you get an extreme momentum move, like you got in Facebook, meta platforms, people are basically sort of looking only at a very narrow part of history. So when Meta came out with its most recent earnings, people said, hey, there's the evidence that Facebook ad revenues are back and they're able to monetize Reels. But remember, this is a company that basically decided that it was going to bet its future on the metaverse, virtual reality, etc. So there's a part of meta platforms called Reality Labs that is supposed to be developing products for this. And what we're seeing is the company is bleeding money. In 2020, Reality Labs lost 6.6 billion. In 2021, that went from 6.6 billion to 10.2 billion. Last year, 2022, we went up to 13.7 billion. I wouldn't worry so much about this if we could say, hey, they're investing in new products. But for example, the Quest headsets, which are supposed to be one of the The linchpins of this, the companies discovering that buyers buy them for a few weeks and then stop using them, or, and this is even worse in some ways, they go to competing apps. So instead of using the Meta Platforms apps, they go to Rec Room or VR Chat. So what you're seeing is incredible amounts of money going into this with no viable product so far coming out of it. This doesn't really matter in your momentum market, but it does mean that when momentum cracks, there's a lot of empty air between this and where the stock really ought to be trading. So I would be looking at this problem, the narrowing momentum market, as a sign that we might be getting near a top, and start to take some profits. If you have profits in Meta Platforms, it might be a good time to take some. I recently went in and out of Microsoft around earnings, made about 8% in a couple of weeks. It was time to take earnings. I would take profits. I would say the same about NVIDIA, which is up about 8% since I added it to my volatility portfolio, looking to take profits ahead of earnings because they do earnings very much late in the cycle. This is what you do in a momentum market when you're worried that momentum may not be going very much further. Okay, thanks for watching. If you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification when we do the next one. If you want more of my stuff for free, go to my free site. It's free. That's jubekpicks.com. It's got 3 portfolios and 1 or 2 posts a day, maybe sometimes 3. I'll go to my paid platform, which is jubekam.com, and that usually has like 3, 4, 5 posts a day and 6 platforms, including some options and ETFs and volatility plays that I think are really well suited to this market. Thanks for watching.